Okay, so in this video we'll be learning something very important which will help you increase your win rate when it comes to trading. You understand? So you can apply this to both the crypto market and both the forex market, and it's going to be all about trend liquidity. You understand? Before you fully understand this video, I hope you know what a trend is, right? A trend is simply when the market is moving in one direction, creating swing points. You understand? For example, for this chart we have, this is an uptrend and it is creating higher highs and higher low, right? Higher highs and higher low, right? And in this process, it is forming trend liquidity. Now, we believe that the market will always take out liquidity to keep moving in a specific direction. You understand? The market will always come down to take out liquidity when it is moving to keep moving in that direction. And now, most times when the market comes to take out this liquidity, most traders will feel like it is a change of character. No, simply the market is just coming to take out liquidity to keep moving in the same direction. You understand? That's why it's called trend liquidity. For example, we can see something like this. The market was creating lower lows and lower highs, right? This is a lower high, this is a lower low, right? And the market came all the way here to break this liquidity, to break this zone, in the process taking out liquidity, but it kept on going down. Now, most traders might confuse this zone over here for a change of character, thinking that the market is about to become an uptrend, while it just wanted to take out liquidity. I hope you understand. So in this video, I'll be helping you understand this better, right? All right, so I'll be showing you all some examples, and after that we'll be going to the live chat so that we can fully understand this better, right? So let's look at some examples. All right, so here are some examples, some drawings that will help you understand this better, right? Let's say the market was moving in a downtrend, as this image is showing us. This is a downtrend, right? And the market was creating lower lows and lower highs, right? Lower lows and lower highs, and in the process it created trend liquidity. Now I want you to observe something. Whenever the market is about to sweep liquidity, that trend must have created a point of interest. What is a point of interest? Point of interest are zones in which the market will likely respect. An example of this point of interest in which the market will respect is either fair value gaps, order block, or supply and demand zone. You understand? These are areas in which the market will likely sweep liquidity to respect. Now, while this market was moving in a downtrend, it's created something like an order block over here, right? I'll use a different color to indicate that. Created something like an order block over here. Now, once that order block was formed, the market will always come back to tap on that order block, and in the process it will sweep liquidity. And you can see this is the liquidity over here. Liquidity is just simply where a lot of traders have been selling or buying, so they'll put their SL just above that place. The market will come all the way back to sweep their SL to take them out, hit that liquidity and keep going down, hit that order block, sorry, and keep going down. You understand? So that is simply how it works. So remember, before a trend liquidity is being formed, a point of interest in the market is being formed. You will see something like FVG, order block, supply or demand zone, right? Now the market will always take out liquidity to aim for those points of interest, because that is the zone in which the market is likely going to bounce off. That is where the banks are usually going to sell the market from, right? The market don't care about this over here, because this is what retail traders are selling. You understand? This is simply what retail traders are selling. All these zones you see here, this is where a lot of traders like us are just selling the market. This is where the banks are looking to sell the market. So the market will come all the way up to sweep everyone's SL, right? And then keep going down. Now, a lot of people might even feel like, okay, since the market has broken this top, is now a change of character. Why the market will still come all the way? They might even as well buy here. The market will still come all the way down to sweep their liquidity as well, to sweep their SL. You understand? To take their money. the market is always trying to be smarter than us. So we have to play along what the market is doing. You understand? So once you understand the point of interest in the market, you know where the market is heading. Wherever you see liquidity and you see a point of interest, always take note of that point of interest, right? Always take note of that point of interest. The market will likely sweep those trend liquidity, head to that point of interest, and keep selling lower. That is just simply what it's going to do. So let's look at more examples. Right? Now, this is an uptrend. And in this uptrend, the market, obviously, a lot of traders would be, buying at all these zones you're seeing here. They'll be buying at all. A lot of people will buy here. A lot of people would want to even set a buy limit here. You understand? So now there's an extreme order block at this zone. You understand? And an order block is also an example of what? A point of interest in the market. Now the market will always come down to this point of interest, and in the process of coming down to this point of interest, it's going to sweep a lot of traders SL, and that is known as liquidity, right? To take out a lot of traders and then keep going higher. You understand? The market will always aim for a point of interest. And remember, I mentioned the 3 points of interest in which you should be looking for in a trend liquidity. That's the fair value gaps, the order blocks, and also supply and demand zone. You understand? For an uptrend is a demand zone. For a downtrend is a supply zone. You understand? So that is just simply what the market will do. So let me give you more examples. This is a trade I took myself. Now you can see the market obviously gave us a change of character here and became a downtrend. First of all, it was an uptrend. Mine is a bit confusing, but first of all, it was an uptrend. Give us a change of character and give us a lower high, right? And kept on going down. But I saw an FVG at that zone. I saw a fair value gap at that area, and I know that yes, the market will obviously come out to take out this liquidity where a lot of traders have sold before it keeps selling lower. And that is exactly what it did. You can see in the next image, that's exactly what it did. It took out a lot of traders that sold at that area, touched the fair value gap there, and kept on going lower. So fair value gap is a very good point of interest. Order block is a very good point of interest. Supply or demand area for a downtrend, remember, is supply, right? For an uptrend is demand area. So these are the points of interest in which the market will always target. So now this example of a demand area, right? We can see the market was moving in an uptrend. A lot of traders would obviously want to take this trade from this zone. Market's moving in an uptrend. A lot of traders will even be buying here, but the market swept liquidity. This is an order block, right? And kept on going higher. Now the market still did the same thing again, created liquidity here. A lot of traders will buy here thinking the market will start going up, but it came all the way down, swept liquidity and touched this demand area here and kept on going up. You understand? The market will always head for a point of interest. So that is just simply how it works. So order blocks, fair value gap, demand or supply area, those are the most important point of interest when you're trading trend. Whenever you're trading the trend and you see that yes, this point of interest hasn't been tapped, the market hasn't touched it before, it means that those areas, the market will still come all the way down there to touch it. One way or the other, taking out liquidity, taking out a lot of retail traders SL. You understand? So let's move on to live charts so that we can understand this better and know how it works. I'll be taking some trades with you all and be seeing how it works fully. So this is an example, and we are looking at the chart Euro USD. As usual, we can see the market is moving in a downward direction, forming lower highs and lower lows, right? Lower highs and lower lows. Now in this process, it's creating liquidity, and this liquidity will have to be taken out. Now this is where we are looking at the chart, right? Let me zoom in here, and the market is still moving lower. Now in this chart, I've already seen a point of interest. And what is that point of interest? I'm looking at a fair value gap, right? I'm looking at a fair value gap here, and we can see that a lot of traders would actually ignore it. A lot of traders will ignore it, right? They don't know that yes, that the market will actually come back to that area to keep selling. Now, this is where a lot of people must have put their sell orders, must have sold from, right? Thinking that this order block will hold. This is where a lot of traders will have sold from, right? Putting their SL there. Now, the market will always do something like this, come back to take out a lot of people's SL and keep selling. You understand? That is what is surely going to do. So, what am I going to do? I'm going to wait for the market to take out that liquidity to keep going lower. That is simply what is called a trend liquidity. So, this is where I'll put my entry, and this is where I'll put my take profit just below. You understand? So now we will now see how this market played out. We'll be playing it, so see how it played out. So now we can see the market actually going up, and we'll be waiting for it to see if it can take out this liquidity here, so that we'll be sure that okay, that's actually a trend liquidity. A lot of traders will still be selling here thinking the market is about to sell, but all of a sudden it took out their liquidity. You understand? You see this area, it took the liquidity out, and you can see that is an example of a trend liquidity. And the market, once it taps on that fair value gap, it started selling massively, because that is where the banks are selling the market. That is exactly my point. The market will always take out retail traders liquidity in a trend to keep going in the right direction. This is where the banks enter the market. So that is where you play smart. You know that yes, that's a point of interest. That is where the market is heading to, and you wait for it to get there before you sell. And we can see this is a massive sell already, heading to my take profit. Well, you can see a little bit of consolidation, and it's went all the way down. You understand? So that's just what I want you to understand here. This is an example of a trend liquidity. The market will always take out liquidity whenever there's a point of interest. Don't forget, whenever there's a point of interest, the market will always come all the way down to take out liquidity before heading in the right direction. You understand? So let's look at more examples to this. All right, so this is another example, and this time I'm looking at an uptrend in Euro AUD, right? Now, I've already seen a point of interest, which is this other block over here, and the market hasn't mitigated it. You understand? Now, I want to let you all on a little secret. Whenever the market is moving in a trend, always mark the point of interest. You understand? Sometimes the market might not actually come down to touch that point of interest, or go up to touch that point of interest, but it's important to always mark the point of interest. You get? Because the market most times will sweep liquidity unexpectedly, head to that point of interest to, keep going in the right direction. And in this process, it will take out a lot of traders. A lot of people SL will be hit. You understand? So in this uptrend, we can see that a lot of people must have put their SL here. They must have bought earlier and put their SL here. But I wouldn't take that trade. I will actually wait for the market to come all the way down to this order block before I'm sure that yes, I will buy this trade. You understand? That's when I will be able to buy this trade. So let's see how it played out. Let's see how it played out. So I'll be putting my entry here, right? And my SL will just be below here. So we have to be sure that this market is going to play out. You understand? So let's see. So this is what I want. This is exactly what I want. So let's see how the market played out. So we can see that the order block has become more valid by breaking structure. And now what we are going to be waiting for is something like this, right? We want the market to tap on this and go all the way up. And in the process, taking out all this liquidity over here, so that we'll be sure that yes, that is a trend liquidity, and it's going to head for this point of interest, right? So let's see how it played out. So we can see the market actually took out liquidity and headed straight up, straight to our take profit. You understand? Most times the market, after it have swept liquidity, it will just go straight in the right direction. Now this is an example of a trend liquidity, right? I've showed you an uptrend and I've showed you a downtrend. That is just simply it. Now, what are the rules? Remember, the market have to create a point of interest. Number one, that point of interest has to be fair value gap, order block, supply in a downtrend, and demand in an uptrend. You understand? So these are the points of interest. The market has to create this, and after creating this, you will see liquidity ranging below or above that point of interest, right? Then the market will come all the way down to take out the liquidity if it's an uptrend, or go all the way up to take out liquidity, head to that point of interest before it keeps going in the right direction. That's just simply how trend liquidity play out. I hope you understood this video. It's AceFX Academy here, and I would love you to apply this to your trading so that you wouldn't be losing money. This would increase your winning rate by 90%. You understand? Because the market always aims for liquidity. You increase your win rate by 90%. So I need you to take it very serious. You can apply it to forex, you can apply it to crypto, and I'll leave it at that. So I need you to go and practice. Look at the chart and look for your trend liquidity, right? If you're a student of mine, come to my DM and show me your examples. You understand? If you're a student of mine, come to my DM and show me your examples, multiple examples. You can show me previous charts. You can show me recent charts in which you want to take a trade. So I hope you understood everything I said in this video. Have a lovely day ahead.